Hello, it is Thursday, the 27th of March, and after a kind of easy start to the week where President Trump gave an interview to Newsmax and suggested that the April tariffs would be softer than full reciprocity and may not all be ready at once and may be easier than people are expecting. He went full on back yesterday with 25% tariffs on vehicles and vehicle exports, and the market didn't like it. It dropped. I am a little bit nervous about this because I think it has potential to ignite a really nasty trade war. The Premier of Ontario, which is where most of the auto industry in Canada is based, was pretty fierce overnight. And in Asia, the auto industry was really, really badly hit with the news about these tariffs. Most of the vehicle makers are struggling pretty badly, and that did weigh very heavily on those indexes. So Hyundai, not just Japan, but South Korea particularly as well, which are considered US allies. So Subaru, Mazda, Hyundai, all of those Honda car makers are all being pretty badly hit with this news. But of course, we don't really have the details until April 2nd. And the way things are going, and I'm not even sure that we're going to get all of the details then. What I found quite interesting was this report that nearly 50% of leaders at major Japanese companies are looking to ramp up their US operations. In other words, a lot of these companies want to start making their goods in the United States so that they can sell to the United States tariff-free. The problem is it takes quite a lot of time to build these new factories and invest in the United States. And while it's also uncertain, I found it really hard to see them doing it in a kind of fast time frame. So that we keep seeing pretty good announcements, but I don't think that's going to be enough to hold off this trade war. Long term, this would be really, really good. This could be amazing for the United States. The problem is actually what we're seeing is it handled really nastily, and I think the market could see a little bit of a shock before that happens. The most interesting thing for me at the moment is how Chinese indexes and European stocks have been outperforming. And I still think that the main reason for that is the announcement of that huge 50 billion money printing in Germany for defense. The problem is that they're going to print all this money, then have all this liquidity, but they really don't have an arms industry to put the money into. But once they've committed to doing that and printing money, I think they're going to do that anyway. And as a trader, markets follow liquidity and money. And so I do think if we get a little bit of a pullback, that Germany and European stocks, where they are printing money, are going to continue to outperform US stocks and stock indexes, and China, which is basically where most of the technological advances are being seen, I also see as attracting investment, particularly whilst the US is so uncertain. And so, when you think about it, the last 4 years, particularly with all the money printing that America has done, we have seen US stocks really, really outperform, and I think we could see that reverse. And as traders, if you can be nimble, I think that's quite good opportunities, because these big funds, it takes time for them to shift their investments. They can't, sell at market. So that's really what I'm looking at. But this news of the 25% tariffs on automakers yesterday was quite a blow. It's certainly seen the dollar back sold again. So most currencies outperforming short term, but as we head into month end, I think it may get a little bit tricky. The one thing that really moved on this news was gold. Remember, in gold we were kind of looking for a bigger three-wave pullback back down to around 2980, 2980 in this daily 20 moving average, and it may be instead that we just go sideways. We're looking for a wave four, so from the beginning of March low. This is a 1, 2, 3. We're in a wave 4, and then we're looking for a bigger 5th wave. Sometimes, this wave 2 here was very simple 3-wave back. Sometimes wave 4s can be like triangles or wedges and go sideways in 5 waves. And so I would not be surprised to see that, especially with all of the uncertainty next week about what's going to happen with the tariffs and the trade war announcements, that I wouldn't be surprised if gold just goes sideways at the highs before the next leg higher. And we're still expecting another leg higher in this one. So, let's see how this sideways consolidation pattern shapes up. But gold setting up for another leg higher. If this is just going to be a higher low here, I think we could still see that kind of 3-wave pullback to this daily 20 moving average. But sometimes, markets, when they don't do very nice, simple, easy to read corrections and 3 waves back to the moving averages and go sideways, one of the best triggers is when the moving average catches up. So that if in gold, we just trade sideways here like this, and eventually this weekly 20 moving average will catch up, and then that will be our trigger to be off and on our way higher again. So a lot of uncertainty this week, tariffs on, tariffs off, tariffs on again. It's certainly not easy to read, and you kind of need to stay on top of the news. So gold and silver, we've retested these highs. I think that we may go sideways into month end. And the biggest thing yesterday, although we had a really nasty pullback in stock indexes, a couple of interesting things to note. Firstly, Bitcoin really wasn't that fazed by it. Crypto didn't get that hurt by the auto tariff announcement. And the other thing to note is that we are into month end, which quite often involves window dressing. And although we had a really nasty pullback here in this S&P, we only pull back to this, we only really kind of pull back, to the trend line support of this bear flag, lower time frame moving averages support here. And I would not be surprised to see another leg higher before this rising wedge is over as we head into month end. If I look at this on a 4-hour chart, how this is unfolding, it looks to me like this is a wave 1, this is a 3-wave back 2 or B, and this is our C leg. And if that's the case, we kind of haven't reached those equality levels. So here's our wave 1, wave 2. I think we've got a little bit further to go. 5,861 here would be, if we are measuring this right, sorry, I'm measuring it this way, would be this previous swing low, 5,860. But it's also possible that this was a little bit of a squeeze mode. So this is A, and this is our running flat B leg, and we've got another bigger leg higher to come. And that would mean from here to here, and then from this low, if it is a low, and we continue a little bit higher. When I'm not sure, and I'm going to take this whole swing and look at the fib levels, and we look level to level to level. And they work like a little bit of a ladder. So if you get rejected at one, you look for the one underneath to be support. And if it doesn't, you are looking at a bigger correction. So for me, the sign that we have rolled over in this S&P and we are headed a little, let me line this up properly, that we are headed much lower and going to continue lower today with a really nasty month end, would be a break of the third touch of this trend line and holding underneath 5,716, which is basically this 236 fib on a back test. Now, if the market is looking at it from these highs, it's actually a little bit higher than that, 5,720. But when I'm not sure, I kind of always like to take the more conservative, slightly lower one. So I'm going to say holding underneath 5,716 would be a breakdown of this bear flag, and we are then setting up a retest of the lows and potentially another leg lower. But just because we've got this month end effect, I would not be surprised to see a bounce from here and potentially another swing higher before this rising kind of choppy overlapping move is over in most of these stock indexes. If we take a look at the NASDAQ, we got a pretty similar scenario here. So as we are here in the open, we are seeing a nasty little bit of a shakeout. But again, I wouldn't be surprised if we don't see another bigger swing higher from here. And Let's go down to the 4 hour, because quite often, you know, these 3-wave corrections can end up being bigger ones. So we see 3 waves up here, we could see 3 waves back, and then we see another bigger, you know, 3 or 5 waves to finish. So very nasty, choppy, sideways, but until you actually kind of break down from these consolidation patterns. So if we were to do it from here, like something like this, and we make it a parallel channel, we haven't quite broken the lows of this potential parallel channel. I'm going to make it a little bit lower just to make sure that I'm not looking at it wonky, and see if this really does break down. And again, I'm going to take my fib retrace levels from this high to this low and see what's going on here. This 236 fib analogy isn't working here, so I'm going to just look for the bottom of this channel. When you've got bunched up moving averages like this, I'm going to look for 50% back of this whole swing. We're not quite there yet. 19947. So here we are sideways, dodging around this nasty 20,000 level again. In fact, if we mark the 20,000 level here in the Nasdaq, this is it. This is the 20,000 level. And here we are sideways back at it. So it was resistance, and then choppy. And now we're going to look to see a pullback and see if we can find some support here for one more swing higher back to these moving averages and one more push higher. So I'm not, just because it's month end, I know the news and this trade war stuff is really bearish, but just because it's month end, I wouldn't want to rule out one more push higher, just because it's one of those phenomenons that work so well in these indexes. But clearly, if we get underneath this level and this here, then and it becomes resistance and we break down this little flag pattern that we're in, that's our setup for then the retest of the lows and continuing lower. And the next fib support, the big fib support we're looking for in the Nasdaq is in the Nasdaq E-mini is down here at 18,078. So month end trickery, and it can be really nasty, is what is going on here. But if you're looking for it to crash today or tomorrow, those are really what we need to see broken down if we're going to see that kind of bigger crash. Some of these pullbacks I think are going to make really nice opportunities. I've talked about how I think Europe is really interesting. But if I go to the weekly, this is AliBaba. When I look at this chart, you know, big picture, let's put my fibs from the highs. And this is what I mean about, I'm not sure that China's going to do that badly from these trade wars. You know, the rest of the world will still buy from them. Now, when I look at this and I look from the highs in October 2020 to the lows that we made in 2022, here's this big 236 fib level at 119.6. It was resistance and resistance and resistance, and now we've gotten above it. We have got really nice bullish crosses going on of our weekly moving averages. The 20 is above the 200, and here on the daily, we've had this lovely bullish cross here. And I think that if, you know, either we go sideways and we continue higher here, but potentially we could come back to this really key support and resistance level at 119. And I think that's going to be a really nice opportunity for another swing higher here in AliBaba. And it may be that we don't even come back that far. We just go sideways in correction. These moving averages catch up and we continue higher. So if you're looking to move across, you know, some of these pullbacks, I think certainly in this stock is going to be really interesting. And the good news is so many of them trade on the New York Stock Exchange. You don't need to go to China to trade in them or invest in them. So not everything, I think, looks terrible, and there are some opportunities to come from these pullbacks. So that's how I'm looking at that. But let's talk about Bitcoin and Microstrategy, which is holding up, and Tesla. First of all, they're holding up really nicely into month end. Microstrategy particularly is holding above these daily moving averages. Usually if you close above this daily 50 moving average, you shouldn't close back underneath it if you're going to keep pushing higher. So we can say that when we gapped higher from Monday, as long as we don't close back underneath that level, we have not got a reversal here. And that level, of course, and the daily 50 moving average is at 316. If we look here, is it? Yeah, 315.63. So as long as we hold above that, I'm still thinking that we could see more upside for MicroStrategy here. Particularly technically, we've done a double bottom here on the February lows and the lows that we made on the 11th of March. And if we hold above this, technically our trade should be twice this distance. So if we measure from this low to this high, that really should be where we get to, which takes us back to these highs, and 408 on the upside would be the measured move for this double bottom in MicroStrategy. So 408, if we take a look at fib levels from this high to low, gets us at, above the 50 towards the 61.8 zone as well. So looking pretty interesting for MicroStrategy, and I'm looking to see if we can find support today to continue higher. If we look at the daily in terms of where we are, really this is clear skies above us. There's nothing to hold us back once we get above here. And maybe we could start to see Bitcoin become a safe haven in kind of messy trading waters. Here in Tesla yesterday, we got knocked back an important first resistance. Now, just like we saw in AliBaba, that 236 fib level is really important support and resistance. And that's where we tried to get above. Really, we've been trying since all week, haven't been able to hold above 281. That's the 236 fib from the highs that we made in December. If we can hold back above here, I think we should have a target up here of the 50% level here at 352, which is also where we should be previous swing highs and lows, and we can really say that we're in a much bigger correction if we're holding above this daily 200 moving average. So this 236 fib and this 200-day moving average are important resistance that I think we're going to retest in Tesla, and I'm looking to see if we can hold above it and continue higher. Certainly this news about the tariffs could be, I don't know, not all Teslas are made in the United States, are they? But it's certainly looking like the market thinks that this is good news for Tesla. And so holding above 281, and you can see on the hourly, that's our hourly 200 moving average. Targets upside are 320 and 352 for Tesla. Watching to see if it could happen. It might be that we have to get through month end and we have to get out of this, and it may be that we go a little bit sideways until next week, and then I'm looking for that level to be support and continue higher in Tesla. So let's take a look at Bitcoin, and then because that has really been yesterday when everything else had a really nasty shakeout. If we look at where we are on the daily, here we are holding above the daily 20 moving average, holding above the daily 200 moving average. More importantly, if we look, this level was support all through February, then resistance all of this month, and now here we're looking to see if it can become support and we can continue higher. In terms of how everything else shook out yesterday, this held out much better. But if we look at this kind of potential channel that we're in, and even if we don't look at it as a channel, we just look at it as a trend line support from the low here we are really kind of testing it. Sometimes you'll see in a corrective move, and I think this kind of potentially looks corrective. You'll see 3 waves up, then you'll see 3 waves back, and then this final swing will be 5 waves to finish. And if we look at what we've done in Tesla from this low, it looks like 3 waves up, 3 waves back, and potentially then this would be 1, 2, 3, 4, and we see another big push higher. And so if we do turn higher from this consolidation, the target's 93,600, sort of 93,600 to 94,000. That would be the measured move that I'm looking for. So here we could argue that this is on the 4 hour and on the hourly, a nice little potential bullish flag pattern if we hold support here and we break out higher. So the long trigger is going to be a break of these highs, and here we are at the bottom as we head into the open, testing support, and we need to see if this support holds and this hourly 200 moving average holds, and we are going to continue higher from here. This would be a fourth touch of this trend line, and quite often they're false breakdowns, and so I'm looking to see if this is a false breakdown. What would it look like if it is really breaking down? Well, we'll see a sharp swing lower, and then we'll see a higher low, and it'll continue low, and that will be a bigger breakdown. But for now, this choppy overlapping pattern, flag pattern shape that we're making says to me bullish, and I'd be looking for this to hold and see if we can continue higher from here. So that's how I'm seeing Bitcoin today, and hopefully all of the other laggards like Ethereum, which has really been lagging, and other cryptos should follow. So we'll see.